Wizard, have you ever stopped to think that living off dividends might not be as distant as it seems? Most people believe that financial freedom is only achieved after decades of investing. But what if I told you there is a faster path? That's right. You don't have to wait a lifetime to start reaping the benefits of your investments. In fact, there is a strategy that few people know about, but it can significantly speed up your path to living off dividends. While many are still stuck on the idea that patience is the only virtue in the investment world, today you will discover a way to make this journey a reality much closer than you imagine. Get ready, because what you're about to learn could completely change your view on how to build wealth and achieve the retirement of your dreams, all with a speed you never thought possible. This video is for informational and educational purposes only and does not constitute investment advice. Consult a qualified financial advisor before making any investment decisions. Investing involves risks, including the loss of capital. Past performance does not guarantee future results. Investing in stocks that pay increasing dividends is a popular strategy for those looking to build passive income over time. Imagine this. You buy shares of a company like Johnson & Johnson, known for increasing its dividends year after year. Gradually, you accumulate shares, reinvest the received dividends, and over time, the value of your portfolio grows. It is a process that requires patience and discipline, but the return can be rewarding. Over the years, this continuous growth of dividends can turn into a reliable source of income, something many see as a path to the much-desired financial freedom. However, it is important to keep in mind that to live exclusively off dividends, it is often necessary to have a very robust portfolio, something that does not happen overnight. We are talking about hundreds of thousands of dollars invested. It is like planting a tree. At first, the growth may seem slow, but over time, that small seed transforms into a large fruit-bearing tree. However, for those who are starting out or have a shorter retirement horizon, this strategy might not be as effective. On the other hand, even if dividend growth is steady, it might not be enough for those seeking more immediate results. This is because dividend increases tend to be gradual, meaning it may take years for returns to become truly significant. The key here is to find a balance between patience and strategy. But for those who seek to accelerate this process, there are other options that can complement this approach, providing faster passive income. Every year, companies like Johnson & Johnson increase their payments, which is great for the long term. However, if your goal is to live off dividends in less time, it is worth exploring alternatives that we will discuss next. When we think about building passive income through dividend stock investments, it is essential to be aware of the challenges that come with this journey. One of the main obstacles is the time required for this strategy to start generating a significant cash flow. For many, the thought of waiting decades for dividends to become substantial can be discouraging. Imagine someone approaching retirement who has only just begun investing. This individual may not have the luxury of waiting so long to see the fruits of their investments. Here, patience is not just a virtue, but a necessity. Another challenge that arises is the financial commitment required for this strategy to be effective. As mentioned before, living solely off dividends requires a large investment portfolio. And building that portfolio takes time and, of course, a lot of capital. It is not something that can be achieved quickly or easily. For those who start late or do not have much capital available to invest, the reality is that returns may be insufficient to guarantee the desired financial freedom. This does not even account for market fluctuations, which can impact the portfolio's value and, consequently, the value of the dividends received. Additionally, it is necessary to consider that dividend growth, no matter how consistent, is generally modest. This means that investors may face years of seemingly slow growth, which can lead to frustration and the temptation to abandon the strategy. But quitting too early can mean missing out on the rewards that come with time. For those who are committed, there are alternatives that can complement this strategy and accelerate the income generation process. This brings us to consider other investment options that may offer faster and possibly higher returns. Although investing in dividend growth stocks is a good approach, there are ways to speed up the process for those looking to live off dividends more quickly. Companies in sectors like technology or renewable energy, for example, have shown accelerated growth potential in recent years. Instead of waiting patiently year after year, you can adopt strategies that enhance dividend returns over a shorter period. Investing in stocks of companies with higher appreciation potential and higher distribution policies can be an effective alternative. Moreover, considering reinvesting dividends in companies that offer higher returns can help compound the growth of your portfolio more quickly. Instead of relying on small annual increases, these strategies allow you to see more substantial results in less time. If your goal is to live off dividends quickly, it is possible to build a substantial income stream by focusing on assets that deliver more over shorter time frames. Patience, while still important, can be combined with actions that bring faster returns. This means that, even with a long-term view, you can benefit from strategies that accelerate the growth of your passive income. In this way, instead of waiting decades for dividends to become significant, you will be well on your way to achieving financial independence in less time. Next, we will discuss these alternatives so that you can choose the best path to achieve your financial independence more swiftly and efficiently. For those seeking a way to generate passive income more quickly, there are alternatives to investing in dividend growth stocks. These options can be particularly appealing to those who do not have decades to wait and want to see more immediate returns. One such alternative is covered call ETFs, which use option strategies to generate high yields. These investments provide a way to achieve consistent passive income, offering monthly dividends that can be significantly higher than those from traditional stocks. This makes covered call ETFs an interesting choice for those looking to speed up the process. Another promising alternative is business development companies, BDCs, as they are commonly known. These companies invest in small and medium-sized businesses, often providing financing to companies that do not have easy access to traditional credit. In exchange for this financing, BDCs receive high returns, which are then distributed to shareholders in the form of dividends. ERCC and NEWT are examples of BDCs that offer attractive yields, making them a viable option for those seeking a more robust passive income in a shorter time frame. Additionally, these companies tend to be more resilient during periods of economic volatility, which can add an extra layer of security to your portfolio. However, as with any investment, it is crucial to understand the associated risks. Covered call ETFs, for example, tend to perform better in sideways or declining markets, but may not capture all the growth in bull markets. BDCs, on the other hand, may be exposed to the credit risk of the companies they invest in, which can negatively impact dividends during times of crisis. Therefore, these alternatives, while promising, require careful financial planning and a clear understanding of how they work. If these options pique your interest, you'll be even more intrigued as we explore covered call ETFs in detail. When the goal is to achieve substantial passive income in a shorter time frame, covered call ETFs stand out as an attractive option. These funds combine stock purchases with the sale of call options, generating additional income that is distributed to investors as dividends. A popular example is QYLD, which offers an impressive yield of 11.49%. This means that by investing in this ETF, you can receive monthly payments that are significantly larger than those from a traditional dividend growth stock portfolio. For those looking for a faster way to live off dividends, this could be a practical solution. What's interesting about covered call ETFs is that they provide relatively stable income, even in sideways or declining markets. However, it is important to understand that this strategy has its limitations. In bull markets, these ETFs may not capture all the growth of the underlying stocks, as the call options limit the appreciation potential. In other words, you exchange part of the growth potential of the stocks for greater predictability in income generation. For those focused on maximizing passive income, this trade-off may be worthwhile, especially if the goal is to generate consistent income to cover daily expenses or achieve the much-desired early retirement. Investing in covered call ETFs like QYLD can be a good strategy to complement other forms of passive income investments. However, it is essential to integrate this approach into a well-structured plan that takes into account your long-term goals, risk tolerance, and liquidity needs. These ETFs can be a tool in the arsenal of an investor seeking financial independence, but they should be used with knowledge and care. If you are looking for passive income alternatives that can be accessed more quickly, business development companies, BDCs, are an alternative for those seeking high yields and willing to take on a bit more risk in exchange for immediate returns. These companies play a crucial role in the economy by providing financing to small and medium-sized businesses that might otherwise struggle to access capital. In return, BDCs receive high interest rates and often profit sharing from these businesses, translating into generous dividends for shareholders. Examples like ARCC and Newt are frequently mentioned due to their attractive yields, which can surpass many traditional stock investments. For those seeking a quick way to generate passive income, investing in BDCs can be a strategic move. The business model of these companies allows them to distribute most of their profits to investors, resulting in significantly higher yields. This can be especially useful for investors who want to supplement their income or achieve financial freedom without waiting decades for the growth of traditional dividend stocks. However, it is important to remember that with high yields come higher risks, such as exposure to the credit of the companies financed by the BDCs. Still, for many, the potential for high returns outweighs these risks. BDCs like ARCC and Newt can be a valuable addition to a diversified passive income portfolio, especially for those seeking alternatives to more conservative investments. However, it is essential to conduct careful analysis before investing, considering factors such as the quality of the companies financed by the BDC and the financial health of the BDC itself. When chosen wisely, these companies can provide a solid source of dividends, helping to accelerate the path to financial independence. If you're already considering these alternatives, you're on the right track to exploring all possible options to live off passive income more quickly. Now that you are familiar with these powerful strategies, the question remains, what will you do with this knowledge, wizard? Are you ready to take the next step towards financial freedom? Don't let this opportunity slip away. The journey to living off dividends can be quicker and more accessible than you imagined, but it depends on you taking the initiative. How about starting to explore these alternatives today and turning your dreams into reality? Remember, every financial decision you make can bring you closer to or farther from the life you want. So, why not start now? Share in the comments how you plan to apply these strategies and which one caught your attention the most. And of course, subscribe to the channel and activate notifications to continue receiving valuable tips that can change your financial life. Let's build the future you deserve together.